Hello and welcome to our 15 Minutes of Fire. I am Bernadette L. Harris. I'm an award winning accountant and the CEO of the BTB Advisory Firm. And we are a firm that helps small businesses create thriving ventures. And so this 15 Minute of Fire session is about bartering. And so think about it. Have you ever bartered in your business or personally? Like, have you ever bartered? By definition, bartering is when you exchange goods and services for goods and services, right? And so this is when no money exchanges hands. I get something, you get something. I give something, you give something. And so in those scenarios, when you barter, that's essentially what you're doing. You're exchanging your services for somebody else's services, or you're exchanging your products for someone else's products. And so I want to talk about this because I think a lot of people don't realize that when you barter, this is a taxable transaction. You created a taxable transaction in your business, and it is important for you to make sure that you, one, know that, and then two, that you are documenting it in such a way that captures this transaction. So let's talk about some of the possible scenarios. So there are times when you barter, you may barter. Like I bartered. So let's say, for instance, if I am bartering, I'm giving accounting services in exchange for you are going to provide me with maybe computer repair services. So you fix my computers, you maintain them every month, and I keep up with your books and maintain them every month. And we do that as a barter. In that scenario, that even though I'm giving you something, you're giving me something, this is a taxable transaction. And so I actually do barter with the person who fixes my computer. So this is why I was able to use that example. And when I record this transaction in my accounting system, I record the sale of the work that I do for him, right? And then I also record the expense for the work that he does for me. Now, it is a wash for us, but it's not always the case. So let's say, for instance, if you are bartering and the service that I provide, you, let's say it costs $6,000, and the service that you provide to me costs $8,000, right? That's unequal. It's an unequal barter. And I've heard people say, well, I give you something, you give me something. We don't really have to worry about how much it costs. And really, when it comes to bartering, you should worry about how much it costs, because in the scenario where my service costs $6,000, your service costs $8,000, if we just barter and just shake hands and be good and all of that, you lost out on $2,000 of income. So the correct way to do that in that scenario is my service is 6,000, your service is 8, we'll barter, right? So I'll provide my service for 6,000 and I will pay you the other 2,000 because your service costs $2,000 more. So one of the things that I want to make sure that you understand is when you are bartering, it's very important that you quantify the service or the product that you are bartering. How much does your stuff cost? How much does their stuff cost? Is it even? And if it's not even, you want to make it even when it comes to cash, right? You want to make it even, the difference with cash. So that's the first thing, is making sure that you understand and making sure that you quantify the cost of the services that you are bartering. The other thing is to, again, in that scenario, when I record this transaction, even though it is, let's say, for instance, that we barter and my service is 6,000, his service is 6,000, it ends up being a wash, meaning that there's no additional income or expenses to claim. But it's very important that we account for it because it is taxable. It is something that's taxable. Now, there are some places, and I've seen this happen, it doesn't happen that often, But there are some places where you can be issued a 1099 for bartered services. And so, because again, it's a taxable transaction. I saw some years ago when I first started my accounting firm, I had someone to come to me and they were like, "Hey, I got this 1099. Um, and I didn't get any money, so whatever." And they just didn't understand why they got all of that. So that's the first thing that I want to share. The next thing is that it's really important for you to make sure that you're recording this transaction. I said that. So the other piece of it is, and this is the piece that's important, if you are bartering your business services in exchange for personal services, now that is really a different animal because your personal services are not deductible when it comes to like on your business side, right? And so let's say for instance is I say to you, "Hey, I'll do your taxes and you cut my hair every week," right? And when we do all the math and come, it doesn't matter if it's even. Like, let's say it is even. What the price that I charge for tax prep is the same thing that you would charge for a weekly haircut, and we all end up being in a wash. The problem is that my haircut is not a business expense. So on my books, I need to record that transaction as a sale that I made, right? And I don't get to write off. There is no offsetting expense that goes along with it. And so that's really, really important. Tonight I'm not going to be as long because this topic is not as heavy as it could be, or some of the other topics. But I did want to bring it up because I see a lot of people bartering and they don't realize that when you barter your services, those services are now taxable. And so it's very important for you to do that. The same thing is true for, this isn't necessarily bartering, but I'll mention this because this comes up sometimes when the bartering conversation comes up. This also applies in situations where you donate your services. So I've seen people want to record the donated services on your tax return. So let's say, for instance, if you're a coach and you coach people and you want to do something for your church. So you're going to coach, say you're a career coach, and you're going to help 10 people at your church with some career coaching, and you're donating those 10 hours or whatever to your church. If you want to write that off on your taxes, you gotta, it's a wash because you gotta claim the income and then you claim the discount that you've given. So it essentially becomes a wash. Now you probably say, well, if it's a wash, why do I want to record that on your taxes? Couple of reasons why you want to record it on your books. You want to get a true picture of what your income is, whether it's money that actually came in or it was bartered money, right? So you want to get a true picture. So let's say, for instance, if you made $100,000 in your business, but your barters were $10,000. It's important for you to show $110,000, even if you have an offsetting expense for $10,000. It's important for you to show that gross number at $110,000 for a lot of reasons. It may make your financials look better if you are looking to get funding. It will show you what your earnings were like based on the work you did, because just because you bartered it doesn't mean that you didn't do the work. So it actually shows like how much money you actually made that year based on the services that you provided. And so those are some of the reasons why, non-tax reasons, but those are some of the accounting type reasons why you would want to add those things to your books. So I hope this was helpful. Thanks again for watching. We're here on Wednesday nights live, 8:30 Eastern. So I will see you next week.